Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right, everybody, we are back for another week in the markets here with our daily live trading show. We are joined back by a familiar face who is back on the show. Hey, James, how's it going?
Hey, I'm good. How you doing?
I'm good. James, you were gone last week on vacation. Tell us how it was. How was the time away?
It was good. It was a lot of fun. My girlfriend and I went on a cruise to the Bahamas. We were gone for a week, but it was a really good time. Before that, because we left out of Port Canaveral down in Florida, which is not too far from Orlando, and we are big horror movie, spooky time fans, and Halloween Horror Nights is going on in Universal, so we got to do that as well. So
Ooh,
we had a big trip, and it was a lot of fun.
That's awesome. Well, it's good to have you back, and I'm glad that you got some time away. Speaking of spooky horror stuff, we are coming into that time of year, which is always an exciting time. James, I'm excited as we go into October. Little sneak peek for everybody. We're going to be putting together some stream themes. We love to do our Halloween-themed live stream, so looking forward to that, and I'm sure we'll be busy putting together some fun stuff there, and should be good. James, this week, in terms of markets, last week was crazy. Had a lot of central bank stuff. You've got the thing pulled up here. We'll let you take the screen for a second. Just show us what's on the radar for you.
Yeah, so not a crazy amount of stuff this week, but certainly some stuff to keep your eye out on. And really, it starts tomorrow with CB consumer confidence happening at 10 a.m. That is a U.S. dollar event there. So we could see a little bit of a spike depending on what that number reads. Wednesday, not a whole lot going on. We usually look for red folders. Those are the most important, most impactful market events, and not too much going on Wednesday, but we do certainly have things to keep an eye out for on Thursday and on Friday. So and Thursday, we're going to get a little bit of European CPI news very early in the morning over here on the East Coast. But then we are going to get the final GDP numbers of this quarter, as well as unemployment claims, both happening at 8:30. And that is sure to move the markets based on those reports as well. And then Mr. Powell himself is going to be speaking late in the afternoon, 4 p.m. over here on the East Coast. Fed Chair Jerome Powell is going to make a statement. And Friday, finally, we are going to have a few more things to keep an eye out on with Canadian GDP numbers, as well as core PCE price index happening in the morning at 8:30. And then later on in the day, revised consumer sentiment out of the University of Michigan is happening as well at 10 a.m. So definitely some things to keep an eye out for as the week goes on.
Yeah, for sure. And one thing that sticks out to me, James, too, about some of the things that you mentioned, we have GDP numbers coming out this week. And one theme that's been really interesting is that the 2-year yield, which we've talked about a lot on streams, has continued to march higher. And part of the reason for that is that last week, James, we had a really big pivot, I guess, in sentiment. Yet again, the dollar was super strong because the Federal Reserve looks like they are more likely to stay higher for longer. And the reason they've quoted kind of for that is that the economy just looks so strong. And so this inflationary problem is not going to go away until that economy slows down a little bit, because of course a thriving economy, or at least a stronger than what is necessary economy, actually does continue to contribute to more jobs, more more inflationary things. So it'll be an interesting time to see what JP has to say later on this week, as well as what the GDP numbers have for us. James, thank you very much for the news read in terms of what to look out for, and I'm sure we'll see a lot more of you this week now that you're back. So good to have you back, and we'll see you on the next one.
Yes, thank you. It's good to be back.
All right. Yeah, guys. So we're going to take a look at some charts now, see what's going on here in reference to some of the stuff James said for us. We've got coming up on the radar. I wanted to mention something about this week. There's a couple things that I think are really important for us to talk about. And the first thing I want everybody in here to do, if you guys are not inside of our free Telegram channel, please join us in Telegram right now. This is actually free. We put out a ton of value totally for free. If you're not already in there, I put out something this morning that is really important. And it's really important for several reasons. Let me see if I can show you guys just a little bit of a sneak peek of what I did in Telegram here. So in Telegram this morning, this is a room that Frank and I run. If you guys are not in our Telegram channel, we're dropping it in the link in the YouTube chat right now, by the way. Click that link, join us in Telegram. There's lots of you guys in there, but if you're not already in there, please join us. I made a point this morning. Frank and I both kind of saw this on Friday and alerted everyone in the Telegram right away. The Fed has made it clear that they aren't messing around with their hawkish game plan. Stocks have ignored them for several months, right? The indices have been flying high, but the Fed has pretty much backed up their they put up roadblocks, and they've said, hey, we are not cutting rates anytime soon. Inflation is a serious problem that we are going to go hard on. And it seems like right now the markets are reacting to this. But I put out a picture that showed the net change in terms of COT data. And we're going to go through that today because it is so important. It is Monday. We do COT every Monday. And oh my gosh, I can't wait to get Frank in here to talk about this. Basically, what we saw, guys, is the biggest risk-off COT report that Frank and I have ever seen. And it's scary stuff. So we're going to talk about that. We're going to talk about trade setups, all that sort of stuff. Again, I want to remind you guys, we have 33,225 subscribers. If you're not already in there, I know some of you guys just joined. Let's see if that number ticks up. I just refreshed the page. If you guys are not already in there, then come join us here, and we'll see. Yeah, we had some people join. So shout out to new people who just joined us inside of the Telegram. We share, again, tons of free value in there. So make sure to join. Again, the concept here with this stuff, the risk-off nature of this last COT report showed a huge increase in bullishness on the dollar. Sure enough, what happens? The dollar has been rallying. Institutional money is buying the dollar, and it has been for a while. The EDGEFINDER has alerted to us that that is the case for several weeks now. We have been bullish USD. We've been bearish indices. We've been, again, we've been watching these moves really closely, and it's been a big thing to pay attention to is the COT data. And so with the dollar, how am I playing it this week? Dollar bullish until further notice, until proven otherwise. The dollar looks strong, guys. Again, big money is going long the dollar. They've been long the dollar. They continue to add to their dollar longs as found in the COT data. So big week here for USD bulls. And again, I think if you get pullbacks, dollar pullbacks, in my view, until further notice, until we get something to the contrary, are opportunities to the upside in my personal trading. So I'll be watching a couple different things. I'll be watching the oil market, which I'm already long on. I'll be watching the USD/JPY. I'll be watching the EURUSD, and I'll keep an eye on indices, as I am not really trading them as a active momentum trade by any means. I just have some other things that I'm more interested in, like the oil trade, the dollar trade. But the indices are really interesting right now as well. They're getting beaten to crap right now. Yeah. So let me show you. If you haven't been seeing the indices, check this out. Here is the NASDAQ off of daily chart. Really, really sold off. And one thing about the S&P 500, look at this, guys. S&P broke support, key support. Came in around 43,050. I'm sorry, 4,350. 4,350 hit and completely rejected. Bulls were not able to hold that area, sold off right through the lows. So really interesting start to the week, and COT data again kind of confirms that bearishness. And so for me right now, the indices are a no-go. I'm not buying them. I am on the sidelines with indices. However, I am still long on oil. We'll see how this trade plays out for me. Here's an hourly view of my idea here on oil. So I picked up oil, and I'm still holding this one. My stop loss is below the previous lows. If we stop out there, then it is what it is. But I think that oil has potential to continue to go higher. EDGEFINDER confirmation is real strong for oil. US oil gets a +6. That's a pretty strong confirmation. Dollar yen also up there. And still bullish on the yields. I mean, it's an interesting time in the markets. All of these things are pointing towards kind of a risk-off environment right now. Indices have continued to be bearish off of the EDGEFINDER, right? US 30, S&P 500, NASDAQ, indices bearish. And dollar crosses still very bearish. The Australian dollar, the pound dollar, and the euro dollar from our scanner are getting some really strong bearish readings. So that is my game plan for the week ahead. When you guys watch my streams here, I show you guys the trades that I'm taking. I show you my watch list. This is my watch list. This is generated by the EDGEFINDER here. Our top setups algorithm basically takes into account lots of different pieces of data and generates a bias based on them. So this output right here is pretty much what I use to find the trades that I take. Now, just because I get a bias from this does not mean I just go buy, dollar yen or anything like that. I still have to wait for a technical setup. So maybe let's do a little chart markup on dollar yen. So beautiful breakout here. If you're watching dollar yen, guys, here's what I'm seeing. We broke out clean through a major level of resistance. That area of resistance could now act as support if we do get a pullback. So how do I measure a pullback? Well, one way I like to do it is to do a fib from the swing low of this move here to the break new high. So dollar yen, again, looks really bullish. Swing low, swing high. Pullback to the 50% retracement looks pretty good, right? You have past resistance here, which could now act as support. So dollar yen looks really, really good if we can get a pullback. Again, we might have to wait for a pullback opportunity. It might not be right away, as we had to wait for oil. And oil is, doing its thing. We'll see if it can play out well. So, yeah, looking for that pullback on dollar yen. Same thing with euro. Euro, I am bearish on the euro. And look at this, guys. Euro hitting fresh lows. My goodness. The thing about dollar strength is when dollar strength comes in, it's relentless, right? The dollar strength is usually due to a risk-off kind of move. It's oftentimes dollar strength is sudden and heavy, right? So we're getting some real fear in the market right now, as we talked about with the COT data. I mean, if you guys caught that in the Telegram channel, we caught that very early on. As soon as we saw the COT data was super bearish for indices, super bullish for dollar. I know Frank took a trade pretty quickly off that. I'm still holding on to my oil trade. Again, my cancellation effect would be if this thing breaks through the lows, as I mentioned earlier. So my stop loss is in place. If it gets stopped, I'll probably be out of oil. But again, there's a lot of fear around further inflationary pressures, and one of the fears is that oil continuing to go higher will cause everybody to spend more at the pumps, cost supply lines more money, and that trickle-down inflation could be a problem for the Fed and keep us at higher interest rates for even longer. Excuse me. Nick, do you think it's wise for a beginner trader with a $100 account to open more than 2 positions in one trade? Junior, I would just say if you're trading with $100, that is a very small trading account. I would say that, obviously do what you want to do. But in my personal opinion, I think you need at least like $500 to $1,000 to trade. After doing I would recommend, if you don't have any money that you're willing to risk yet, stick to a demo account. Again, $100 is not going to be that meaningful anyways. If it goes up by a couple bucks, like it's not really that meaningful anyways. So you might as well just trade a demo, save up your capital, in my personal opinion. Yeah, so oil still staying strong in this one. Guys, we're going to take a quick break here. We're going to thank our sponsor. We're going to come back and do COT data real quick with Frank, who is probably itching to talk about this with me. COT data is looking super interesting this week, an incredibly risk-off event. And real quick, we're going to take a break. We'll come right back after this this little commercial break, thanking our sponsor who makes this show possible. Shout out to ACAP, and we'll be right back with Frank after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, and we are back with Frank. Hey, Frank, how's it going?
I'm good. How are you?
Good. And so, Frank, we do this every Monday. We do our breakdown on the COT data and what's been changed. But this week is different because this week is probably one of the most interesting COT reports that we've had in a while. So let's jump right into it. Walk us through what you saw COT-wise that really caught your attention. I know you took some trades right at the end of the week last week. So what's your thoughts? What's your reaction to the COT?
Yeah, so what this is pointing to right now is some heavy bearish, or I would say risk off instead of bearish. Risk off sentiment overall. They're buying, the dollar like crazy. The net long positions have increased by a substantial amount. They're selling a lot of things, but seeing dollar, Swiss, yen all in that buy zone, and then scrolling down and seeing the indices, even some metals in that sell zone is pretty alarming to me. And it's not just that they're slightly bearish or slightly bullish. The dollar saw an incredible increase for like what we've seen so far. Usually we'd expect like somewhere between 0 and 2 to 3% on either side, but seeing a 16% change in the net long positions is pretty alarming for, I would say, the COT side. So yeah, with that, I was looking at USD Swiss pairs. I shorted gold just because of yields and all that. I know their gold was positive this week, but gold's actually working out. I shorted Kiwi Swiss, and the Kiwis actually heavily sold 12% to the short side. So got stopped out of that, but looking to re-enter because I'm just not really buying this rally right now.
Sure.
This is the S&P, but here's the Kiwi Swiss. So it broke this pretty strong resistance level. I mean, it's gonna have to close above it and have some confirmation before I feel like maybe it could keep running higher. But just seeing what smart money's doing and how risk off everything is, I think I'm going to keep looking for shorts on this pair. And in the long run, it's just a downtrend too. So not bullish on the indices, not bullish gold. Just going to look for.
Well, Frank, what I think is interesting too, as you mentioned with the COT data, I'll show you guys this again. So what's interesting to me about the COT report this week is that sometimes we get kind of like a mixed COT report. Like sometimes you get like some risk on, sometimes you get some risk off at the same time. This week, it seems like a pretty much a perfect risk off report, meaning that institutional money seemed to heavily move out of risky assets and move into safe haven assets. So what you can see is, what did they sell? They sold the Dow, they sold the S&P 500, the Australian dollar, the Canadian dollar, the pound, the NASDAQ, Bitcoin, all of these things are considered to be more risky assets. And then what did they buy this past week? They bought the dollar, they bought the Swiss franc, they bought gold, they bought the yen. These things are, generally speaking, more risk off assets. So it seems like there was a flood to safety last week, and it seems to be carrying on as we get going into this trading week already. So my bias here, Frank, this week would just be, generally speaking, looking more for risk off plays until further notice. Same with you. I'm not looking to buy the indices when they're tanking like this. I think that could be
Yeah.
a falling knife. That could be a while. So yeah.
So the only thing I could think of, though, is this report is from Tuesday of last week. Even though we get on Friday, it comes in at Tuesday, or it's the activity up until that Tuesday. And that was before the rate decision. So I know they were getting heavily bullish on dollar and gold, just to avoid, sort of the interest rate hike scare, if there was one. But they decided to hold rates again, so it's hard to tell. Maybe they had these heavy positions going into that decision, and then they decided to sort of ease off that.
Yeah.
Just we'll know next Friday. But from what I see in this report was just such a wild swing in sentiment that I feel like it's unlikely that they're gonna switch so quickly.
Sure.
Yeah, just watching the risk off pairs, probably gonna look for longs on the USD. I'm gonna get back long Swiss probably, and yeah, we'll go from there.
Very cool. Well, yeah, thanks for breaking that down for us, Frank. Again, COT data, we do it every Monday, and it is a very, very cool little report that we put together there, thanks to a lot of Frank's design work. So guys, we'll say thanks to Frank in the chat. If you guys would light him up with some thanks, Franks, and Frank, we'll see you back on the next show. Thanks for coming on.
Sounds good. Thank you.
See ya. All right, guys, we are going to bring in Ivan here in just a moment. He's going to talk through some setups with us. I'd be curious to hear from him in just a moment. Before we do, I just want to remind you guys, if you would like a copy of our software, we have a small software company here in Atlanta, Georgia. We build tools for traders. And if you'd like a discounted copy as a subscriber here on YouTube, here's how you can do so. You can send us a direct message using this link that's been dropped in the chat, thanks to our producer. If you would click this link, it'll take you to a direct message center where you can speak with someone on our staff for a discounted copy of the tool. So when you click this link, here's what it's going to show. It's going to pull up our support website where you can have a direct message conversation. Just click chat now, put your name in there. You can ask for discounts. You can ask for a tour and just click start chat, and you'll be connected with a real person on our staff right away. So we've got a couple of people in the office who can help you out. Get your copy now if you have any interest. With that said, guys, we're going to now go over to Ivan to see what his reaction is to all this dollar bullishness and oil moving higher and all this stuff all at once. So Ivan, we'll bring you in, say hello to you. Hey, Ivan, how are you?
Hi.
It's good to have you back, sir.
Thank you very much, sir.
Are you what's the latest from you? Are you staying up all night with the newborn?
Yeah, no, I've been given a break to sleep tonight, at least, so I'm alive now. But yes, it is all day, all night.
Great. That's those. I can imagine that is probably a ton of work, and we are appreciative that you're coming on the show to hang out with us. Ivan, are you kind of back in the swing of things? Are you looking at markets again? And I guess, what are you looking at right now?
I'm worried about the USD, yeah, and how fast it is currently moving. I saw that you were like, oh, I want to come back down to some kind of support. Yeah, I agree with you on that one. But look at how much it has been growing ever since July. It's up 8%, and then by the beginning of the year is already up 17%. Oh, sorry, a bit less than that, but it's a lot. So I'm like, is Bank of Japan gonna smack us with an intervention? That's what I'm worried about.
Yeah, that's fair. And I think it's one of those things too, Ivan. I guess to push back on the idea there too, that is this thing overbought? You have to also think about, in terms of yields right now, same
Mm.
question happens there. Is the 2-year yield too high? And I think that one of the major pressures on this 2-year yield, and why I think that it actually could continue to trend higher, is, economic data out of the United States is still relatively strong. And the Fed has been saying for quite some time, hey, we're going to keep interest rates high for longer. And a lot of the market has ignored that, thinking that, no, you're going to have to cut rates. And I've been myself included. I thought, a lot of the trend out there was thinking that, interest rates were going to kind of steady Eddie, and then they would be kind of rolling back down next year. And now that's kind of been questioned pretty hard by the markets. And so there is this pressure of, the economy still looks pretty strong, and the Fed has no plans to back down, at least from what they're saying. And the scary part is that the Fed recently has a really good track record of sticking to what they're saying they're going to do. Several times the market has called their bluff, and then it ended up not being a bluff. So it's an interesting kind of time in the markets. And I wonder where you're at with the dollar relative to this. Maybe not just specific to dollar yen, but what do you think is, for me, I'm kind of back to my dollar bullish case until something changes, because right now you have central banks last week were super dovish compared to the Fed. The Bank of England came out and said, hey, basically we see inflationary pressures subsiding. It was like a dovish hold, whereas you had the hawkish hold from the Fed, which was like this, hey, we're not afraid to raise rates again. So two different narratives, and perhaps some divergence in the currency world, which might create some great trends. What do you think?
I'm afraid. Because somebody asked me, do your dollar? This is basically the same, I would argue. Yeah, it is a dollar bullish scenario now. It is risk off. It is a very strong euro dollar downtrend, or dollar strength trend. When is it going to end? When the market figures out, well, this is not going to last forever, is it? So it will be tossed around when the expectations for the next CPI is going to come out. CPI comes around 10th of the next month. So that's the next point of. And that's the next point of, is dollar bullshit going to continue? And it's probably going to continue all the way until then. And for those who has sold off Eurodollar, I've see somebody. I'm not in that trade. I'm not planning to be in that trade either. I'm just waiting for the whipsaw both ways, and I will be out. So if I try to sell now, I will lose money guaranteed. So yeah, I see the dollar bullishness, but I haven't done anything about it.
Fair enough. I kind of am in the same boat. I don't have any dollar crosses that I'm trading. I have been holding on to an oil trade. The indices have been really, really bearish, and I don't really short them too often. There's just trades that I think are a little bit easier than trying to short indices. Maybe oil bullishness, maybe dollar bullishness, those sorts of things I'm a little bit more interested in. However, for people who are watching indices, they just look terrible in my opinion. We've broken so many levels of support. Buyers just are nowhere to be found. And until we start seeing signs of life on the indices side, that one is probably just, for me, no interest. Now, I mentioned a pair that I'd love to get your thoughts on. You mentioned that dollar bullishness, you kind of are in the same camp in terms of, looks like dollar bullishness is likely to continue. One interesting currency pair right now to me is the pound dollar. I mentioned this briefly a second ago, and in case some of you guys missed it last week, the Bank of England basically cited that they see some slowdown in the economy, and they also think that inflationary pressures are going to continue to subside in the UK. And so they mentioned, instead of raising rates, which is what the market thought they were going to do, the Bank of England decided to hold rates. And this is a very different narrative to what the Fed has said, which is basically maybe more rates higher. So the reason I bring this up again, and why it's so important to me, is because when you take a look at the divergence between one central bank, which is looking incredibly hawkish, and you look at another central bank that is looking possibly even on the dovish side of things, those divergences in the currency world create some of the monster trends that we saw, for example, in 2022 and in the first, several months in 2023. So I think that there is this case where it's possible, as much as this pound dollar trend looks like it is already kind of made its move, it very well may continue. Now, does that mean I think it's a sell down here? No, I don't think so. I think pullbacks, though, could be really interesting on the pound. So, Ivan, can you do a markup on the pound dollar for us and tell me what you think about it?
Oh God. No. The thing is that I agree with you. And then the squeaky says, but it was 5 votes to keep the same and 4 votes to increase. It almost increased. Yeah, I just want to say that if you looked at CPI is actually falling. It is 45.7 or something. It was 11. Right. So inflation UK has come down. And I think it was even appropriate to just see and wait, because now it's dropping like a stone. Anywho, when it comes to British pound US dollar, I would argue that a deeper retracement is kind of what I should hope for and expect. Because if I take these small ones, at any given point, these small ones are just, in my calculation, it's like a bottom. It's a potential bottom, and it goes a bit further until the big move comes along. So if I were to do anything here whatsoever, I needed to come back up to 123.50. Until then, I just want to stay away. Because sometimes the market can do that, and when it does, then you should be prepared. And if it just continues what it does now, I would say that it's actually struggling to go lower, even though it does. But the spring back up again is quite fast.
Yeah, no, I think it's an interesting, when you get these trends, a lot of times people start feeling a little bit of FOMO. They're like, this thing is just, every single day I look at it, it's down. And people who are long are getting, stopped out. People who are wanting to short it are like, every day I miss this trend. So I definitely agree with you. I think that the move here is justified, but waiting for a pullback to get back involved in a trend like pound dollar, it's one that I really like. It has a lot of correlation right now to what the indices are doing, which I kind of like. If you think that there is that potential bearish continuation and risk on assets, the pound dollar to me seems like one of the more obvious trades out there right now. But because it's so obvious, that's why, guys, the trend is already trended, right? When you think about obvious trends, the most obvious ones are usually the ones that are moving just in a straight shot, because the market's like, oh, wow, that makes a lot of sense. So what Ivan and I are kind of pointing towards is like, if you want to be part of the obvious trends, you still have to wait for the pullbacks, because if you just sell here, sure, it might keep going lower, but what you're going to start doing is you're going to start building a habit where it's like you sell and you have terrible risk to reward. Because where do you put a stop loss on this if you're watching the 4-hour chart? Do you put a stop way up here and hold on to a huge loss if it goes against you, right? You have to be very careful with. That's why waiting for the pullback can be so key to not just taking the right trades, but also taking the right trades at the right time to kind of reduce your drawdown potential. So good. Thanks for doing that, Ivan. I wanted to ask you about the pound because I figured you might have a little bit insights on the Bank of England, which you did. So you quoted the votes. Awesome.
Yeah. Can we do S&P 500 for 2 milliseconds?
Sure. Take it away.
Because, well, I don't know. I do seasonality stuff, right?
Oh, you want to talk about possibly October. I know where you're going with this, but proceed.
Yeah. Proceed. Okay. So if what I normally do generally, I go back to last year, right? And I'm like, what happened last year on the S&P? The S&P 1st of October last year, which becomes 2nd this year, that was a bottom. And then maybe around 10th to 13th, we have a double bottom. Okay. So anywhere in between there, I need to be already bull. So if you see any dollar bullish, any S&P 500 bullishness, you can guarantee that Ivan is in there somewhere. And because I had a discussion earlier today, and I just want to point it out because yes, it is currently bearish, which it was also last year at the same point, and then it kind of paused out the last week, which is I'm expecting it to do. But where are we? Are we in a catastrophic environment? Are we do we have bank crisis? Do we have financing crisis? Do we have bankruptcy left, right, and center? Do we have people losing their job left, right, and center? No. People have jobs. Unemployment is very low. We have inflation going higher. We have jobless claims is very low, and businesses are still making money to an extent. So I think this is going to go up until we have a catastrophic event, which is unexpected and we didn't foresee it coming, which rocks with the whole fundament of business, which we currently don't have. We just have rising interest rates, and we know how that goes. It's just a bit of less profits. Okay, then we continue on. That's why I would look for a bullishness in October.
No, I like that, and I think it's worth mentioning in terms of you have a seasonal trend there. Also, another argument or perhaps a justification for that seasonal bullishness this end of year is that retail facing businesses, oftentimes a lot of them make a large component of their yearly revenues in this final Q4. And it makes sense. We're coming into, in the US, Thanksgiving. You have, of course, Christmas. You have New Year's. You have a lot of gift giving. You have a lot of personal spending, a lot of stuff. And again, a lot of companies like, for example, Target or Walmart or makeup companies, many retail-facing companies tend to do very well during this time as shoppers go shopping. And so perhaps that is an argument for why there may be some bullishness that starts coming back in the October and December months, which historically actually are pretty good months for the S&P, as you mentioned. And so, yeah, I mean, what do you think? So Ivan, take your pick. Let's just say between S&P, NASDAQ, and Dow, if you had to buy one October 1st, and hold it to October 31st, Halloween, which one are you picking?
S&P 500.
Okay. And show us why. Or at least explain why.
Because Nasdaq is too volatile for me in terms of it is technology companies that are extremely extremely risk to higher interest rates. They are very pumped by debt. So I want to be a bit more safe. And when I've tried to do the same, Nasdaq has hit my stop loss more than S&P 500. So it's just personal grudge.
Fair enough. I mean, I think one point you made there real quick, and you brushed through it, the concept of higher interest rates for NASDAQ specific. For people who might be newer to this stuff, NASDAQ is comprised of a lot of financial and tech stocks. So, of course, higher interest rates, which banks and tech stocks rely very much on for their profit margins, they're heavily exposed to it. Whereas if you look at like a company that may have less debt or is not so much impacted by rising and falling interest rates, that can be huge. Also, I want to just show you, guys, what we were talking about here in terms of seasonality. If you are not familiar with seasonality, it's a really cool concept. It's basically the study of when certain parts of the year the markets tend to do well or not so well, depending on assets. So I've got the S&P 500 selected here. And what's kind of interesting is that you do get, over the last 10 years, you get some nice positive expectancy into the end of the year, as Ivan and I are talking about. So the blue line represents the last 10 years average. If you take a look at September, this seasonality, had you paid attention to seasonality, which I don't want to pat myself on the back, but Ivan and I both do that pretty often. It's kept me out of a lot of indices trouble this month. I have not taken one momentum trade to the upside on the indices. Have I sold some options, sold some puts longer term? Yes. Are they going well? No. Maybe I shouldn't have done those either because of seasonality. But for the most part, I have not really been aggressive on indices. And this seasonal study that Ivan and I are talking about, and we talk about it often together, is playing out very nicely. So if seasonality continues to play out nicely this year, the slight bias would be more bullish on the end of the year on the indices. So I just wanted to quote that just to show you guys some data to go along with what Ivan and I are talking about. So Ivan, anything else other than the indices, which I agree, actually, the end of the year indices trade is probably one of my favorites. What else are you looking at? Anything else?
I just want to point out to those who are in that trade, I'm not going to mention who, but I know they are, that New Zealand yen is reaching its projected high for the month. It might go a bit higher, but at least 89 is coming in soon. And Australian dollar yen has a target of 96. Those are these bullish yen pairs, including USD yen, which should peak around 149. And just to go back to last year in USD yen, we're not going to analyze it too much, but if I remember correctly, when they did start doing this funny business that they did last year, it was around the monthly target. So I'm getting uneasy.
Yep. I mean, that's the thing is we talk about this so often, but it is so powerful. It's the simplest thing, seasonality, but just understanding when certain parts of the market tend to do certain things during certain parts of the year, it can be really, really powerful information. But I know we could go on this topic forever, Ivan. I just want to say, if you guys have not been exposed to some content with Ivan before, Ivan is one of our coaches within the Discord community. He also does one-on-one coaching for people who are looking for extra help. And if that's something that you're interested in doing, you can find him in our Discord, or you can also find him on his own YouTube channel, which we've got linked in the chat right now. If you click that link, if you subscribe to Ivan on his channel, you can reach out to him through his various socials and find him there, where you could ask for some coaching. If that's something you're interested in, I highly recommend it. I know many people in our community have taken him up on that offer and have really benefited because of it. So Ivan, thank you very much for coming on the show and sharing some wisdom with us. I know you're busy at home with the newborn, so we appreciate it. And we'll see you back on the next show.
Thank you for having me.
All right. Always good to have Ivan on the show, guys. He is probably one of our longest term contributors to the A1 Trading Show. He is also, like I mentioned, he's one of our coaches within the Discord, and great trader to have in our network. If you have not already subscribed to him, highly recommend it. We also showed some seasonal data here today, guys. I just want to let you know that this is something that we've built. Data is a beautiful thing. It is also a lot of work to build data tools, and it is what our company specializes in. If you would like access to our data, which is basically an algorithm that helps me find the trades that I take, as well as Frank, who uses it every single day. If you would like access to our software, here's what you can do. Right now, we are going to drop a link in the chat. This link will allow you to get access to our data for significant discounts by basically messaging someone on our support team. When you click this link, it'll open up this link right here, which is basically a way to have a live chat conversation with someone on our staff. Click that link, click EDGEFINDER 15% off discount, as well as tour the EDGEFINDER. If you want more information about the tool, click start chat, and a team member, someone from my staff, will work with you to answer questions about the EDGEFINDER and see if it's a fit for you. So if you have not already done this, please message us right now. Click that link. And also, one last thing I will say, if you guys would like to also join our Telegram channel, it is free to join. We'll drop a link to that in the chat here now as well, so you can keep in touch with us. And we put out tons of great stuff there for free. Frank and I put a lot of work in there. So feel free to join us on Telegram. Thank you, guys. Have a wonderful rest of your day, and we'll see you back next time.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with ACAP, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.